Happy Sunday, money magnets and master traders. Welcome back to Uncle Charles' YouTube channel. Looks like the S&P 500 was able to defend the 50 daily moving average as support. And I tell you, there's been cases when SPY has hit that 50 daily moving average as support and went on to new all-time highs. Will that be the case again? But how did the market defend that 50 daily moving average? They definitely faked out some bears, and let me explain. Last Friday, Uncle wrote, if above 667, 669 must clear to put 671 back in play first, then 672.5 and 674. If 667 does fail, 665 will be in play next, then 663.5, 662, and 660-ish. And we can see on the 15-minute chart, Uncle's levels and setups worked out very well, where it smashed or broke down 667 and hit the 665 level before bouncing a little bit. But if you weren't able to catch that breakdown, maybe it moved too fast for you, there's always the back test as resistant. When a support turns into a resistance to confirm the breakdown, that's an entry. And it also broke down 665, that's another entry, and it gave us a nice drop to the downside, few dollar moves. But where did the bulls take over? Because at that point, Uncle's mindset was we're in sell the bounce mode. Well, the first thing the bulls did was recapture my 663.5 level. We broke it down here around the 1045 candle, recaptured it 2 hours later at the 1245 candle. This was alerted in Uncle's Discord. I wrote, I prefer to trade with the trend, but for those that like counter trend trading, 663.5 cleared, put in 665 in play. No puts unless 663.5 fails again. And we look on that 15-minute chart, it cleared. And then the next candle, it tested that level as a support, confirming that we're not going to have a false breakout setup or a false recapture. We're going to head up higher. Uncle did not really trust that recapture. However, that yellow line right there, that's the 665 level where the 50 DMA was. That was the one that I trusted more. You don't always have to catch the bottom of a move. You can catch it on the way up. So I personally did not play the 663.5 recapture, but the 665 recapture, it wasn't as nice of an entry, but it was still good enough because it made me more comfortable when it recaptured the 50 DMA. And we can see that it aged very well. So we had beautiful moves to the downside where we broke down 667 and 665. And we had a nice false breakdown setup where it recaptured 663.5. And the one I trust is when we captured 665. That was also alerted in Uncle's Discord. I wrote right there, 665 cleared, put in 667 back in play, then 669 above, and it was gorgeous. No prediction, just our ability to react to the price action. So now I want to talk to you guys about if the bottom is in or not. And if it's not, what would that look like as well? I want us to be prepared for the bull case scenario and the bear case scenario, because we are master traders and master traders are ready for anything. So with that being said, I'd say the 50 daily moving average defended. But is this bounce just a relief bounce to back test lost levels for the back test and goal setup? Or is this truly the bounce that can send us back to all-time highs or maybe set some new records? The price action will answer that for us. If this is a dead cat bounce, once again, the levels that were recaptured has to fail. That would be a false breakout setup. So what levels were recaptured? 669 and the fib level at 667. So starting tomorrow, if we see that 669 and 667 fail, we're likely dropping back down to the 665 level and the 660.7-ish level. And of course, below the 50 daily moving average, we will know for sure, without a doubt, that the sell-off continues, and last Friday's bounce at the end of the day was just a dead cat bounce. So once again, we need to see 669, 667, 665 fail to put those lower targets in play. I would be bear biased below the 50 daily moving average. But if the bounce continues, and this is more than a relief bounce or a one-day relief bounce, next levels that must clear is 671 to put 672.5, 674, and 675.6 in play. Now above the 674 level, as you guys know from that previous all-time high back in early October, that would be a big win for the bulls if they can recapture that level. and above 675.6 would not only recapture a fib level, but put price above all my moving averages once again, and that would be bullish tendency. And if price action showing bullish tendency, I would be bullish with the price action. But I think the real question that many of you are having is, Uncle, how do we know, or how will we know that our bottom is in? As you guys can see, the 681 level is still my 23.6 fib level. And if that level recaptures, that will be extremely bullish, not only because that's a fib level, a critical fib level, but it would also be a breakout of this blue down trend line. Above 681 would recapture a critical level, but also put SPY in a bullish breakout situation. So if you ask me, when will be the bottom? I'd say when lost levels get recaptured, especially 681. And if 681 gets recaptured, we'll likely have a higher low from the low we had from Friday, and will most likely, more than not, head back to all-time highs. And like the last time we tested the 50 DMA as support, we could head over to new all-time highs with the big 700 as the next target. Who here is ready to witness some new history? So remember, we don't need a crystal ball. We just need our faith in the price action and our ability to react to it. If we start clearing those resistant levels and getting back above Uncle's moving averages and getting back above 681, bottoms in. But if we break down support levels tomorrow or Wednesday, breaking down 669, 667, and definitely the 50 DMA, the correction, the sell-off, whatever you want to call it, it is not over yet. Here is QQQ, also had its own bounce. The 50 DMA, which is that orange line for QQQ, also defended. So for more upside, 611, 613, 617, and 618.7 would all be in play and must clear. If we're talking about a bottom being in, I need to see price back above 618.7 as well as the 625.7 level. If this is a dead cat bounce, and we were just getting a relief bounce to cool the RSI down, I need to see 609, 607.3, and 606 fail. And we'll likely go back down to retest the 50 DMA. And if it gets tested again, there's a good chance it might not hold. So below the 50 DMA, which is around 601.3-ish, I would be very, very bearish. But like I said, if we clear 611, 613, 615, 617, and 618.7, that would be a big victory for the bulls, and we're likely going for the gap fill. Gap fill's all the way at 632-ish. So while QQQ and SPY is looking a bit mixed right now, or neutral I should say, between being bulls or bearish, Tesla's definitely bearish. Cup and handle has been invalidated. The 50% retracement of that cup has been taken out, and we smashed those lower levels. So if it is bounce time, if we are to get a relief bounce, I need to see 634 and 441 recapture to put 448 and 458 back in play. Otherwise, I would stay bearish below 434. From here, the next support levels I have is at 429, 427, and 425.5. If those levels fail, that's very bearish. 424, 422, 420, or much lower in play. My targets would be the 411.5 to the 413 zone if 425.5 gets taken out as support. NVDA has been looking bearish lately, but gave us somewhat of a bounce on last Friday. And the bears failed to break down the 50 DMA. Not the first time this happened. It was quite a battle back in mid-October. The bears just could not break that moving average down, and they failed to do it again last Friday. If there's more upside, 189 and 190.3 must recapture to put 193, 194.5, 197, and 198.7 in play. If there is a bottom, getting back above 194.5, 198.7 and a 200 level would definitely, certainly help the bull case. Otherwise, if we start breaking back down support levels 187 and 184.3, we are bearish. The 50 DMA is around the 183.4-ish level. So if that can finally break down, that would be a massive win for the bears. Something they couldn't do in October. Will they do it in November? That remains to be seen. So remember, above 189 and 190.3 is bounce time continues. No bottoms in unless above 198.6 or 200. That's what the bulls need. But if we lose 184.3 and the 50 DMA goodbye to the bulls and hello to more downside. Here is Amazon. Technically speaking, it did not break down the previous low back in February. We did have a wash below it going down to smash this previous pivot high from early September around 238.8ish, but we found buying pressure there. If there is more upside, 245.5, 248 and 249.5 all must recapture. I would be bullish again or favor a bottom is in above 249.5 or 251, 252.7 or higher in play. But if it is time to be bearish and Friday was just a dead cat bounce, 244 and 242.5 must fail to bring back a test of 238.8 or much lower. My next target would definitely be around the 233 or lower area. Meta also attempted a bounce. It's not quite bullish, but it did avoid it more downside when it bounced on Friday. Will we get a relief bounce? A much needed relief bounce? If the answer is yes, 621.8, 623, 625, 626.3, and 628 all must recapture to put 630, 635, 636.5 or higher in play. Bigger relief bounce is possible above 636.5. But if those levels fail to recapture and support at 620 and 618 fails, we will likely be dropping another $10 to $15 to the downside. And no, that is not an exaggeration. Microsoft had a big body red candle on last Thursday, followed by a doji. If this is a reversal pattern, then we can expect a big body green candle tomorrow, but it would need to take out the high of the doji that we got from Friday. That high being at 499.38. If that level clears, it will likely pop back to the upside. 502, 504, and 505.5 would be the levels I'm watching. And above 505.5 would be a big win for the bulls. That is a fib level. Recapture of the fib level should send us higher. Another $10, $15 pop to the upside for a relief bounce. A bottom should be in if we can get back above all moving averages. So I wouldn't trust it until we get back above 530 and 533 plus. Now, if Microsoft fails to get back above 499.3 or the 505.5 level and more downside is the plan, I have support at 496, 494, and 492.3. If those levels fail, we will be very, very bearish, and is a good chance we drop another $15 to the downside. Apple here is still chopping, with the chop range being 2071.7 and the bottom of that chop range around 266. Unless we fully break that range, give me a daily chart close above or below that range, I can't fully give us a bull case or a bear case. I can give you a bull case or bear case, but my lean would still be neutral. So above 271.7, I would be bullish with 276, 277.3, and 280 plus back in play. And of course, below 266, I will be bearish with 274.5, 263, with 264.5, 263, 260.6, and 259 or lower in play. Here is IWM, also went for a bounce. We have to watch out in case we got ourselves a double bottom here. If that is what the bulls are going to get, some follow through on that double bottom, they'll need to clear 242, 243.3, and 245 plus. Above 245 plus avoids an inverse cup and handle pattern. So they'll need to clear 245 and also clear 247 to put in a bottom. Otherwise, if we break back below 240.8, 239, and 237.5, I will be bear bias on IWM. And here is VIX. Still managed to stay above the 5 DMA and the 20 DMA. So it's still in the short term looking a little bullish. We did get some selling pressure though from last Friday. If there is more to be had, 18.7 and 17.5 must fail. If that happens, that would be bearish on the VIX. We don't want VIX to be bearish. But if it is bullish, 20.7 and 22.3 must clear. They couldn't do it last Friday. They almost did, but almost is not enough. But if they do, 23.8 and 26 plus would be in play. If you want volatility, you want the VIX to pop to the upside. And before I let you go, I must give you the DarkPool levels. 2.6 billion in premium at the 670.85 level, and the $1.2 billion in premium goes to the 670 area. So 670.85 and 670, there's some good amount of dark pool activity there. For some reason, the big money players are very interested in that area. So above it, bounce is possible, and below it, more downside incoming. Guys, appreciate y'all for being here. I love y'all. If you want more content from Uncle Charters, check out the pinned comment below. Join Uncle's extended family in the Discord, and let's be money magnets together. I love y'all. Peace.